Yo, 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 welcome to the show.
Yo YouTube, what is good? Welcome back to the channel Zero to Hero Investing. Happy Saturday to each and every single one of you. It's 8:53 a.m. Eastern Standard Time and this video is going to be an update on my Robinhood portfolio. If you are new here, we do updates on my portfolio, both in like my individual, my taxable, and my Roth IRA. We look at the dividends when they come in, like the end of the month. I do sell a little bit of options on the side as well if you're into that. Talk about savings accounts and credit cards and cool things like that. So if you want to see a noob, a young person just talk finance or try to learn about finance and talk about it, or just if you just want to hear me talk, just consider liking and subscribing and just keeping up with the videos as they are released. So this video, of course I'll be looking at the performance of the portfolio over these timestamps. Got $100 of buying power there. Chat a little bit about the options, the crypto, and the stocks, my holdings, and probably will use this view because it's a little bit nicer in my opinion. Easier to talk about, more intuitive. So without further ado, the portfolio is just shy of $14,000 and it's pretty interesting how this usually happens on a Friday, I swear. I'm just a hair shy of like the breaking the next $1,000 milestone, and then of course the next week, like Monday morning, I'll do my deposit, and the deposit will take me there, like past the milestone pre-market, and then as soon as 9:30, boom, the market tanks because it's let's say it is a little bit elevated. Like the markets have been doing so well over the last few weeks, maybe a month, and it's like finally Monday, I make my deposit. I'm like, ooh, 14,000. And then 9:30, it's like, oh no, calm down. You're at 13,800 again. Like you're gonna stay here for a while, and we might even show you 13,007. So slow down, slow down. But anyways, it's just funny to me how that happens. So yeah, it's a Saturday. The portfolio is up $7. That's 0.05%. 1 week up 1.81%. 1 month, almost 6%. That's really nice, honestly. That's like $800. Jesus. 3 months, only 2%. Year to date, we're around. I'd say around break even, and it's nice that we're at least positive, like barely. But to know that like SPY has been trading like year to date, it's 12-13% up. It is really sad to see this, but I do understand that my portfolio is skewed heavily in certain stocks and stocks that haven't been performing like really well year to date. Tesla, Apple not the best, Realty Income, Under Armour, like yeah, like things like that. I understand, and I'm slowly kind of planting my feet by investing more wisely, buying more of SPY and ETFs and things like that. But it's a slow transition. I understand. I'm rebalancing, let's say, and it's not gonna happen overnight. But maybe 2025, a year from now, March 18th, I will be more in line with the performance of the entire market. So yeah, year to date we're up $8.52. So we could buy a burger with that. 1 year, at least we're up 10.4% there. Like I said, $97.50 in buying power, and a lot of that is from the Ford option I sold. I had bought a what was it, 1182 call expiring in June, and it was break even. I've been doing the poor man's covered call strategy against it, and selling against it and bringing in small amounts of income from those sells. But I thought it was time to sell out and close that position. So up overall, not on the call. I like the long call, but overall it was still a profitable trade. Now we're selling Under Armour 750 strike. I would really want to get out to Under Armour, but I rolled this for $10 credit. Thought I'd at least collect something. Dogecoin here. I really never look at this. I have 103 coins, but and we're also down about 50%. Yeah, 52%. So yeah, let's look at this view for the holdings. So I think this is sorted by, yeah, now it's sorted by equity. So my largest holding is SPY, S&P, SPDR, S&P 500 ETF. Largest equity, definitely something I have been wanting, and I'm very happy to see in my portfolio. Um, Probably, maybe, yeah, maybe it's my largest like total return as well. I don't really want to go back between sorting. I guess I'll do it this one time. Yeah, so it is my largest total return as well. But in terms of equity, that's what I'm focused on right now. So SCHD is my second largest, 921. Got 11 shares of SCHD and SPY, almost 3 shares of SPY. I really want to get that up to 3 shares, but SPY is brushing like 530. I know it will pull back. Do I really? Question mark. I just thought I'd wait. I just thought I would wait. So Spy want to get some more of that. Definitely up to 3 shares at least for the time being. SCHD 12 shares obviously would be my goal. VTI we're already at 3 shares of that. Um, Third largest holding in my portfolio. So I know there's a ton of overlap between Spy, SCHD, VTI, but I am very happy that they are ETFs and they're the top three holdings in my portfolio. And you can see it's almost a quarter of the portfolio. Not really. I mean, maybe just judging from this, probably like 23% of the portfolio is comprised of these top three holdings. I like to see that. Number four is Apple. Apple, we have 4 shares of Apple, and four is a nice round number for the number of shares, and coincidentally, it's also the number that will make us have at least $1 in dividends for each time they pay their dividends, and I'm very excited for that. It's nice seeing Apple as such a strong growth company, but they still have that little extra caveat of a dividend every quarter. So we're gonna be getting we should be getting $1 from Apple, and it's a number four holding in my portfolio. Very good performer. It definitely had its rough time like a few weeks ago, but it seems to have picked back up, and I love to see that. Tesla is next, um, number five holding. 4.2069 shares. Not much to say there. We're up $51 in it. Hey, Under Armour. It sucks to see that this is so high in my equity because I'm down almost half of my equity. Almost like how do I say this? I have lost almost 40-50% of my investment into Under Armour, and of course, I this was a bad um sold option. A put I sold around earnings. Horrible decision. I mean, good decision because I learned from it, but or still bad decision, but it's good that I learned from it. But I've been doing this the best thing I think I can do in the situation, and that's selling my or putting my 100 shares up for collateral by selling calls against it. It's trading at 750, or sorry, it's trading at 665, and my calls are striked at 750, so I think I'm good. If it does go above that, honestly, I'm fine getting out. I'd be selling it still at like a $400 loss, but over the years I've been selling calls against it, and I'm probably at like $150 in this premium from that. So yeah, I'm fine with with the situation. Realty income, uh, almost 11 and a half shares of that. Lovely to see realty income picking back up. It has been down for a minute, and it seems like the I don't know if there's good like forecast for interest rates, and that's what's been contributing to its slow comeback, or pretty fast comeback, honestly. But so far so good. Down only $78, and I know like a month ago maybe we were down at least 100. So that's nice to see. Ford, 51 and a half shares of that. I'm not buying any more Ford until this number is less than my average cost, $12. So when it did dip below like a week ago, I jumped in and got 1.5 more shares. But Ford's back above 12, and I'm fine keeping or not buying anymore until it dips again. Yeah, I'm good for now. Good for now. But Ford has been doing well. Not a, I mean, we're not like crazy in gains or anything, but I'm just happy I'm slowly building the portfolio or the size in this position. Microsoft is next, 1.36 shares. Just like with Apple, this should give us at least $1 in dividends. It looks like it's trading at 420. That must have been the max paying price for yesterday expiration. That's cool. Average cost 321.55. I don't even remember Microsoft trading that low, so it's cool to see that the average cost is so low. We're up $133 in that, and yeah, Microsoft is just something that I'm very happy to be invested in and would love to have more of it in the portfolio. Amazon's been doing very well. I wish, like I said before, we were picking up more positions in it, like expanding our position when we were down like double digits percent. But now we're up. Now we're up. Very happy to see that. But hey, we had opportunity to capture at better prices, and we didn't really do that. Costco only 0.55 shares of that, but it's so expensive of a stock where that's $437 right there, 438. We've already gained $35 in appreciation. And yeah, Costco should be a long-term hold as well. Love my investment in Costco. SPYG, 5.55 shares of that. This is doing what it should be doing, and that's growing. Definitely has been a strong grower in the portfolio. I think it's up like 13, 14, maybe 15%. And it's, yeah, I'm sure that when the market starts to fall, this will probably fall at an elevated rate as well, or like an inflated rate, just like how it rises so quickly. It has all these good or big growth companies within it, so those are gonna fall like a freaking stone on a parachute, I'm sure. Stag, one of the REITs, break even on that, but we'll be buying more. Would be nice to see this up to 10 shares, definitely. Nusi is, we're about break even with Nusi, and I like to see that. Nusi is doing what I think I wanted it to do, and that's just it can trade flat, it can slowly appreciate, but like don't fall and just give me dividends. Like just be a dividend machine for me. And it's been trading relatively flat. I mean, we're down probably 5% at one point. Now it's about break even. But those dividends are so nice. They keep coming in. They're consistent. And I like to see that. Visa, we have at least a share of that. Visa is something we want to own more of, but it's just such an elevated, expensive stock at the moment. Target, love my investment in that. We're up about 25% in Target last time I had checked. Johnson and Johnson, J&J, this is starting to come back too, and a lot of this I'm sure is due to me just DCing in because we were down like a decent percentage in it, but still continued to buy at those prices, and I think it's been paying off. Maybe one day soon we'll be in the green with J&J. General Mills, this I be buying General Mills, especially since I believe it and Pepsi, they are two of one of the few stocks that pay a January dividend. So whenever I buy with my ex-div dates in mind, General Mills and Pepsi always get like a decent chunk of that deposit because there's not a whole lot of stuff to choose from. When you're looking at June, you're looking at so many companies that have their ex div in June. So it's like the same amount of money divided amongst less companies or positions for January payments, but for like June or March payments, it's crazy. Chevron, 1.4 shares of that. Um, Great investment. Did this during COVID. Good appreciation. Coca-Cola, 3.5 shares. Coca-Cola has been picking up pretty nicely. I think recently, the last few weeks or month. Probably tied with the whole McDonald's news with them, their $5 meal and all that. Main Street Capital, great appreciation. I'm happy, very happy I started this position. Great dividends and yeah, love to see it. American Electric Power 2.1 shares. I like that position. McDonald's kind of just touched on that. Want to see at least a share of this for sure. For sure, for sure. We need at least a share of McDonald's. Um, it's a company that, I'd see for the long run as well. Pepsi, um, yeah, one of my January payers, loyal to loyal to those dividends. Good appreciation, blue chip company, Pepsi, see for the long run. Home Depot, I think their ex-div date is coming up on the 30th or somewhere towards the end of this month. So I will be getting at least a little bit more of this. Maybe it will be at least point 0.6 of a share. But we're a little bit in the red at the moment. Home Depot, I see, a strong future for it. AT&T, not the biggest fan of this investment, but I think it's been doing decently well. Like the dividends come in, we're not crazy down in the position. We have been dollar cost averaging. That has been put on a hold. Maybe I'll make it up to 11 shares just to have a clean number, maybe 12. But AT&T, I don't mind it. It's sitting there on the fence, but I don't mind it sitting there on the fence. Smith and Wesson, 11 shares of that. Really, really good appreciation and good dividends to Horizon. I wish this were performing more like how Newsy was or is, but in terms of dividends, it is, but not in terms of like share price movement. It like I think that it's like a 15% loss in Horizon. I'm not sure, but yeah, it's something I'm keeping my eye on. Not sure what to do with it. Verizon been doing well. I've heard bad stuff about it, but so far so good with Verizon dividends and the share price appreciation. Starbucks, not gonna lie, I've been buying a lot of Starbucks, both in my Robinhood and in their stores or maybe in their app, because they've been having a lot of like buy one get one free or 50% off, which is kind of the same thing. And like I get the notification at least a couple times a week, and I'm like, as a customer, sure, like maybe me and my girlfriend might go tomorrow if they have that promo. Because it's a pretty good deal. It's like $3-4 a drink at that point for two people. Very cool. And but as an investor, it's like, why are they like, what's going on, Starbucks? You didn't have good earnings, and now you're giving drinks away. It's like I'm on both sides of the coin. But hey, whenever I go inside their stores, even their drive-through, it's pretty packed. So maybe these buy one get one free things is a good marketing tool. Like it works out better in the long run. Like I'm sure they do the math and they have their financial team and all that. But their stores are packed, so I know they're doing good business. I mean, I like Starbucks. I think just like most people, it's expensive, it's overpriced, but it's just there is a nice taste to, something that comes out of a Starbucks cup, let's say. ExxonMobil, very good. Did I even talk about Starbucks? We have 2.01 shares of that. We've been buying a lot because obviously it has been down a lot, at least from where we bought it. We initially started buying it. So yeah, ExxonMobil, I mean, not much to say. It's been doing pretty well. Good dividends, good stock price appreciation. Google, I heard they started to pay a dividend, or they're starting to, and that's absolutely crazy. Now it will definitely be more on my radar because I will say I am a little bit biased to ex div dates because it is one of the metrics that I use in terms of knowing when to buy stuff. But yes, Google needs to be at least a share. I mean, it's Google. Come on. Waste Management 0.57 share, it needs to be at least a share too. Um, it's been doing its thing though. Not a lot of equity in that. We need more. Like it's WM. Come on. PPL been doing its thing. Would love to see 4 shares in that. Um, yeah. Essential utilities. This one I am a little bit like WTRG, like it doesn't grow a lot. The dividends are consistent and they do grow. It's just the stock has been pretty flat like recently. When I say that, I mean years, but I know it has potential. So I will hold on to this, especially for the bit of diversification. I know it's in the utilities kind of sector, so I don't want to like sell this and throw it into like tech again. But the- I like WTRG. I'm just watching it for now. IAT is just Dow Jones U.S. Regional Banks ETF. Recent position, probably my newest position. I got two shares in it, and it's my version or it's my way of exposing myself to the banking industry. I mean, we're only up $3 percentage wise. It's I don't know, maybe 2%. I'm not sure. And yeah, or maybe 5% actually. I'm just trying to do the quick math based on these two numbers. Brunswick though, one share of that. Love to see that at least one share. I like round numbers like that. And down in the position, slightly in the red. But like that as well, it helps me to diversify. If you're new to this, it is in the marine industry, like sea life, fisheries, things like that. It's a new position. Like I've said before, it was introduced or mentioned to me by one of my friends who's very into boats and boating, and I did my fair little bit of research into this, and thought it was a good investment. Sweet Green, this is one of my recurring buys. Sweet Green, it's a restaurant, guys. I'll be honest. It's a restaurant that I've never been to, I've never seen, but I know the idea behind it, and I just think it fits so well with where society might be, where I think society is headed. So I thought it was a good investment for at least $1 a day. I thought it was a good investment. 2.5 shares, we're getting there, and it's been doing well so far. We have gained about 40% of stock price appreciation, and that's taking into account that it's a recurring buy of $1 every day. We've gained $23 in that, almost 24. But it's nice to see that O'Reilly is another one of the recurring buys. This one's the only one we're down in. There's three of them, almost $5 down. But O'Reilly is something that it's such a good grower. Like, pause the video, go look at O'Reilly's all-time stock chart, like max time stock chart. It does nothing but grow. I'm like I had to be a part of that. So I'm buying O'Reilly, I think $1.25 every single day. Pfizer exposes me to the healthcare pharmaceuticals type of industry in investing. We're just break even on that, $1 in the green. Yeah, Pfizer, it's been beaten down, especially since the COVID hype, let's say, is dying, but I think Pfizer still has a lot of future potential. It's one of the big players in that industry, so I think maybe one day I'll sell it and get into an ETF, but or maybe I add an ETF on the side. But Pfizer, I like it. I like seeing the name in my portfolio, and of course the dividends are great. So yeah, IGPT. This is Invesco's like AI and like next gen index fund, I believe. Next gen software. So yeah, this has like your Nvidias, your Broadcom, Qualcomm, like that kind of thing. Your Intel, Micron, like those companies, the chips and the AI and all that good stuff. Google, I think, even is a part of it. And I just thought it would be good to invest broadly into this sector, and this was a good ETF that I chose to do that. This is done as a recurring investment, $5 every Tuesday, which is pretty good. Unless the stock market's closed on a Tuesday, it's like $1 a day, and I like that. Pretty nice for me. It takes the money directly from my bank account, so yeah. Camping World, that is a position we're down in. Definitely initially got into this because of the dividends, but they have cut the dividends since. But I wouldn't say I would jump ship. I think the company still has future value and potential, so I should really DCA into this. Like it's a good time to buy. It's at a very, very nice price. It's the second smallest holding in the portfolio, and yeah, I mean, I think I should be buying some more, so I'll look into that. AMC, at this point, I mean, we have $1 in equity. At this point, it's really a joke just having this in the portfolio. I should get rid of it. And then the crypto, we have just Dogecoin here. Look how small it is on the map, on the graph. But yeah, this is the chart too. You know, I always love seeing the chart, looking at the chart. Um, Ideally, this is SPY-G, SCHD, VTI, and then SPY-G. You know, if you watch my videos that I drop every Sunday, those four ones at the top, at least 25%, that would be a nice short-term goal. Where's SPY-G right now? Let's see where that falls in the. Oh, it's way down there, Jesus. So SPY-G 414 equity, Apple's 760. So you're gonna need at least $300 more in SPY-G to get it up there, assuming Apple stays where it's at. All right, guys. Thank you so much for watching. I appreciate you guys who have stuck around to this point. Again, the portfolio almost $14,000. Maybe the next time I make the video, it will be above 14K. If not, then I'm sure your guys' portfolio will have also, fallen with the market. Let's see, let's see. But until then, I will see you guys on next time, which should be on Sunday. Take care. Peace.